Good morning, everyone. Welcome to our first vlog on real estate in the Property Buyers and Business Buyers Group Australia. And a lot of talk has been going around in terms of obviously the economy, specifically in real estate. If you look at the stats recently, you would see that the figures have been all over the place. Although it's not as bad as many would project it to be. Just over the weekend in New South Wales, we've had around 60% or 68% to be specific clearance rate in auctions. On the other hand, if you look at Queensland, it's around 24% clearance rates, which is which is a big difference there. So it clearly shows that across the nation, it's very different in terms of the markets, or the real estate markets. So how do we understand all these things? Over the last 7 weeks, say mid-March to mid-May, the jobs fell by around 7.3%. A lot of unemployment, obviously due to COVID. There's a lot of concerns as to where the market's going to go in the next 3 to 8 months. So how do we answer all these questions? So today we've got Scott Hochgesang, who is a real estate guru in his own right. He's been in the industry for a bit.
Thank you,
Abhi. Hey there. Hey, Scott. So Scott's basically a real estate coach. He helps both buyers and investors in their building their business portfolio in terms of their real estate purchase needs or sales or whatever it may be. And he sources properties all over Australia, from regional New South Wales, Sydney, all the way to Queensland. So I thought it would be best to bring him on and ask him a few questions regarding the real estate and real estate market and first home buyers market, and as to where things are going to go in the next few months. So want to introduce Scott there and want to ask him first question, which is, where is the market at the moment, and where do you think it's going to go in the next few months, and what do first home buyers as well as investors do in this very confusing and volatile market?
Well, thanks for that, Abhi. We hear people talking about the property market a lot of times, and they like to generalize for this country. And I guess what we like to do is focus on specific segments and areas. What we're currently seeing are some areas of the property market are eligible for the new home buyer grants and other government initiatives that have just come out. And that's creating rising demand, and likely in areas where those properties are scarce, we're going to be seeing price increases. On the other hand, we may have areas where new blocks of units have been built around our major cities, and we've got developers sitting on blocks of units trying to sell them. And in many cases, we may see falling prices. So, look, I think big picture, what we're seeing here in Australia is that we're being quite successful in beating the coronavirus relative to other countries. The long term, we're quite bullish. We're going to see a return of immigrants wanting to move here, get those foreign students back. And on a long-term basis, this is a great country to buy property in. Still going to see some hiccups along the way. For first home buyers, you've got some very interesting opportunities out there now to leverage and potentially build yourself a new home. In a market where maybe you couldn't afford to do that in the past. Look at Sydney, for instance. There are a lot of grants on offers. In addition to the $10,000 first home buyers grant and the stamp duty concessions, the federal government's introduced its new home builder grants, and there's another $25,000 on offer. The catch to all of this are that the rules are still sort of evolving. We need to be quite careful where we're making decisions, and our advice to our home buyer clients has been not to lock yourself into anything until we've got a firm set of rules, so that we know for certain that the property you think you're eligible for a grant for will in fact come true.
Yeah. Now, there's been a lot of talk with the new home builders package that's been announced, and that's meant to boost the construction industry. And a lot of questions there, especially in the Sydney market, because when you do the numbers, you see a lot of them, actually, there's not many properties that a first home buyer or an investor can actually buy, which is a brand new house, which qualifies and all of that. But if you look at Australia as a whole, then there's opportunities there for a lot of different investments. So an investor or a home buyer in Sydney trying to avail those grants, what options do they have? Do they have to stick to Sydney by itself, or are there options outside? I'm talking about regional New South Wales or interstate as well.
Yeah.
Yep.
Look, for Sydney home buyers, I guess the question is really, where do you work in this city? Where do you want to live? And are you comfortable potentially commuting in from an outer area of Sydney to your place of work? Many of us work in the Sydney CBD, or maybe in Parramatta or North Ryde. The properties that typically are eligible for these grants are located down in the southwest. So we're looking at the Leppington corridor headed down toward Campbelltown. So that would be one area where we think we can get a hold of land and help clients build properties and hit that $750,000 or less mark. Up in the Northwest, you're out maybe up at Riverston, out toward Box Hill, and there's areas out west around Penrith and Blacktown as well. But you're not going to find a block of land and build something within 15 kilometers of the Sydney CBD. Yeah,
that's probably right there. In terms of, there's a lot of questions there from first home buyers. Many of them, obviously, they try to save as much as they can. Properties are not cheap, so they talk about the $10,000 first home buyer grant, as well as a $25,000, I think, owner or the builder's grant that's been out at the moment. So in your experience, would that really work out? Can a first home buyer unveil these two and kind of put them together and probably get a bigger grant there?
If you buy the right property, I think the answer is yes. And in Sydney, look, it always boils down to land availability. The issue we've had in this city for so long is there's only so much available land near the city center. And even in some of these outer areas, that land may not be developed and ready to build a house on. So the time frame for this initiative is really through the end of the year. And your focus needs to be on finding a block of land that's either registered and ready to build, or that you have confidence that that developer can have it ready, because you're going to need to commence a build on within 3 months. And that's quite a tight time frame. So again, this is sort of an area where we're just advising home buyers to be cautious, but also be out in the market looking now, because the best opportunities are going to be for the early movers.
Yeah. Also, I know you've been in this game for a while, and you have been talking about the first home savers account and the first home loan deposit schemes as well. So if someone wants to get, not quite ready yet as a first home buyer, but in the next few months or a year or two, wants to get into how can they unveil these and try to make it easier for them to enter a market such as Sydney or Melbourne?
Well, one is boost your income. So no, you want to start with other side incomes, anything you can do to increase your income and increase your borrowing capacity. Look, if you're on a hiatus for work due to COVID, you want to get returned back to employment. And if you've got a spouse you're buying with, 2 income earners are better than 1. In terms of boosting your savings, we still do have a first home super saver scheme here. It's not talked about much in the media. It's a new version of a program that was created by Kevin Rudd maybe 10 years ago. This is the Scott Morrison version. And you can make extra contributions to your super, save some taxes on that money on the way in, and pull that money out and use that for a house deposit. So we've done calculations where a couple can save, potentially $60,000 through that mechanism. And the tax savings on that money could literally put as much as $10,000 or $12,000 back in your pocket. So that's sort of free extra money that you have that comes from the government program.
Well, that's quite insightful there. Having said that, you also deal with US properties as well, and a lot of people kind of compare between different international markets as well. And a lot of people say that the Australian property market is overpriced, it's a bubble, and so on and so forth. Having an insight in different parts of the world in terms of real estate, what are your thoughts on Australian properties compared to, say, US, for example?
Well, we've got pretty large differences in the two countries. One is available land that's there to be able to build houses on. The countries are about the same size geography-wise, but 80% of the US probably represents buildable land around all of the cities. In many of the outskirting areas, you've got farmland that's being converted over. It's quite easy to develop. And Australians don't realize you can often buy a block of land for $5,000 or $10,000 around one of the major cities in the US. You're an hour commute into your job. And it's possible to build a house for $100,000, $200,000. It's really the exact opposite here in Australia. Our land supply has been governed, one, by availability of water. So if we don't have water in these new areas, and a lot of this country is quite dry, you're never going to be able to build homes in there. Very high infrastructure costs and tax costs. So, there are sort of some structural reasons as to why the two markets are different. Would I go to the US now and buy some investment properties? Look, the US is being heavily impacted by the coronavirus. We've seen numbers as high as 1/3 of people are not paying their rents at the moment. So we've had some issues here with people not being able to pay rents, but nothing on the order of what's happening in the US market. So it's one that you need to get educated on if you do want to go over there and buy cash flow properties.
My final question would be, we're all gripped with this coronavirus pandemic, and not only Australia, all over the world, people are affected by it, economies affected by it. Now, as we know that it's not just Australia, even Australia, New Zealand, for example, has already recovered. It'll have an impact what happens overseas. So in terms of real estate, how much of an effect, we haven't had that much of an effect compared to some of the other industry like travel, for example, but how much of an effect COVID would have, say in the next 6 to 8 months in real estate, in your perspective?
Yes. Look, be very careful with inner city units, and in particular, the foreign students not being able to come back to the universities has caused a large glut of these units around some of our universities. We're seeing vacancy rates 10 to 15% in inner city Sydney. Up in Brisbane, it's the same. Melbourne, it's a bit lower. So those pockets of real estate are going to be the heaviest impacted, and there's a possibility we may see some forced sales there later this year when the JobKeeper benefits come up. So we've got some clients saying, hey, we're going to wait, have a look at the market in September or October to see what's out there. Longer term, this property market has been driven by population growth and immigration. We have to believe that immigration is going to return and eventually build up to its previous levels. I think this is a wonderful place to move to raise a family, and I think many people in other countries, many with high incomes, are going to be thinking the same as we come out of this coronavirus. So look, long term, I think we'll be a star out there and an oasis in this world out there full of risk, but it's going to be some speed bumps maybe along the way.
Well, the long-term projections look pretty good. That's good to know. Now, if anybody wants to know a bit more about investing in New South Wales, outside New South Wales, Sydney, Melbourne, or even US, how do we get in touch with you?
The simplest way is probably to connect with me on LinkedIn. You can just Google me and find Scott Hochgesang. We're happy to do free phone consultations with anybody who wants to have a chat with us. And if you're in Sydney, hey, let's get together and grab a coffee. We're now able to do that, and we've got cafes open, and we can see really what you're after, what your strategy is, help you put a bit of a plan together, and just make sure that the properties you're looking at really suit you and your goals. So treat us as a resource. We're here to help any that think they'd like some assistance.
Thank you, Scott, for all your tips on properties and where the property market will go in the next few months and years to come. I hope everyone else got a bit more insight as to where, where to invest and where not to invest and so on. If anybody has further questions, please contact Scott, and have a good week ahead.
All the best. You have a good one, Abhi. Thanks, everyone.
Thanks.